Hi everyone, welcome to 2026 and the Advanced Mortgage Solutions podcast. Here with your expert Scott Miller today, and today he's going to give us a bit of a summary of 2025, what we have to look forward to in 2026, and obviously how it's relevant to mortgages, buying a home. So Scott, over to you.
Yeah, look, Happy New Year, Joel, and to our viewers. It's had a bit of a good breakaway, which was nice. The weather wasn't always playing ball, but it was a bit of fun. So all refreshed, recharged, and ready to go for 2026. But as you said, it's been an interesting time. 2025 would be seen as a good year, I think. Interest rates fell for the whole year. And I think we had a total of about, it was almost 3% in drop from start to finish. So anytime you get that kind of drop, it's good news. One of the weird things about 2025 is normally when you see interest rates drop, you see house prices kick off. We really haven't seen that until about now. I think we're really getting some sort of grass shoot type feels about things and commentary around house prices starting to come up, particularly in Christchurch. I don't know if you saw the latest figures, but it appears that we increased about 3.5%. Over December, sort of early January, so it's a good lead in to what I think's coming, and I think it could even get up to those double figures like we have had in the past, particularly because it has been so long since rates have started to drop. To see the natural result of then money become easier to get, more people in the market, house prices going up. It's a pretty standard kind of cycle. That seems a little bit disjointed at the moment, but I think we'll find that catch-up's coming and it's only just around the corner.
Yeah, that makes a lot of sense. I have seen that sort of Christchurch, from a regional point of view, the prices have sort of held or had slow incremental growth over the last year compared to a lot of other regions which have come back. But I didn't know that we'd had, was it 3.5% growth in such a short period of time?
Yeah. Well, that's right. Yeah. I think
Interesting.
The reason that Christchurch kept its prices so well is we're just coming to the end of the impact of the earthquakes, right? Because the earthquakes hit Christchurch exactly at the moment that in the rest of the country they were in an upward trajectory on house prices, and it immediately stalled, and actually our prices fell as a result of the earthquakes. And then you found for quite some time we've sort of been out of sync with everything, and slowly but surely those have started to sync back up again. COVID was a good opportunity for that to happen, because there wasn't a lot to do. A lot of people were spending money, locally, domestically. They couldn't have overseas trips and all those sorts of things that COVID sort of put the stop to. And we almost caught completely up into the cycles of the rest of the country then. And then since then, just through the matter of timing and things, we've started to bring that back in. So our highs are at the same time with the rest of the country. And that's why we held ours so well, because we're still playing that small catch-up game on where our property prices should be for the size of the city compared to the rest of New Zealand. Those earthquakes really sort of hurt us in a way that we were completely out of sync for so long.
Interesting. The other thing that I won't say specifically where I am, obviously, because that's my personal information, but I'm in a region of Canterbury. I'm not in Christchurch, but out of Christchurch, which is one of the fastest growing regions in New Zealand in terms of people moving from big cities. A lot of people seem to be moving from bigger cities to Canterbury, don't they, at the moment, after COVID, which is, I imagine, also adding to the dynamics of the Christchurch market.
100%. And the people that we see, the number one reason is, so why did you come down? It's not because they got a promotion down here or something. It's said better lifestyle, affordability and getting on the housing market. The land is flat, so they had so many different choices of where they could go, sort of thing, with transport being not such an issue like Auckland and Wellington face, going out to the hut or, South or North Auckland or over the bridge for Auckland. There's all sorts of barriers in those sorts of landscapes, not so much here in Christchurch, and that was the reason for their move. And you're right, a good percentage of people that we're seeing are coming down just for, I want to own a house and I want to get on with life, sort of thing.
Yeah, interesting. And so, if we're sort of starting to see a bit of price momentum swinging upwards, heading into 2026, I imagine you'd be saying to people now is the time to sort of buy because the market has been at a bit of a lull, as we mentioned last year.
Yeah,
It's a good time to probably get in now before we hit
yeah,
hit those, as you said,
100%.
maybe
Yeah.
potentially double digit, if not single digit
That's
growth. Yeah.
right. And interest rates
Mm.
are still relatively low. And we're never going to go
Yep.
to the interest rates that we saw through COVID. That was a completely false economy, and meant that was meant and placed in there so it encouraged, spending and kept the country going without that international sort of visitors and all those sorts of things coming. And a lot of businesses hurt, as you know, and we're just really only getting over that as a country, leave alone, the Canterbury region. Looking forward to 2026. It's going to be an interesting year. I think we've pretty much seen the bottoms of rates, and we've had a bit of a blip in the long-term purchasing power of interest rates. So you've seen those 3, 4, and 5 year rates just sneak up a bit above that 5%, where before Christmas they're around that 4.99, 4.95 area. There's a lot of chief economists around the country sort of scratching their head saying, but there's no reason for that to have happened. It's they still don't really know why we've had this little sort of blip, because the world economy is still pretty much in the tank, and
You mean blips of rates up
yeah,
while we've seen
yeah,
this little
yeah, yeah.
blip of them
Why?
going back
There's no
up? Yeah.
reason.
Yeah.
The world economy is still pretty much in the tank. The New
Yeah.
Zealand economy is sort of leading that. We're at the front of that and sort of getting out of the issues
Mm.
and things that COVID and all those sorts of things, the overspending and the um, printing of money through the GFC and all those sorts of things. We're leading that charge where the world is quite a wee bit behind us and still only just beginning to sort of look at reducing interest rates and things. So yeah, there's a bit of a head scratching going on, and largely they sort of believe that that'll come down. It'll come back down to where it should be, should be. And we
Yeah.
really won't see any movements in rates or interest rates, I should say, until sort of 3 quarters through this year, maybe the beginning of next year. We'll start to see those tick up in a more natural kind of way, rather than this unusual blip that's come along and no one can explain. Yeah.
Yeah, yeah, I've noticed that as well. I was doing a bit of reading and quite a bit of commentary around exactly what you're saying. That it appears that interest rates may have sort of hit their bottom, and over the next sort of 6 months to 12 months, sort of slowly start to increase back up again,
Yeah.
which is quite interesting. And then you look at the US cycle, which I follow, obviously the Federal Reserve, making a decision in January, are they going to drop? Everyone thinks they're going to pause, but there's a bit of pressure apparently from the bond market. I don't want to get all technical into that side of things, but it's, they probably are likely possibly to drop again by March. So how does that US sort of ripple through to our
Yeah, well,
side of
interestingly,
side of things?
their Reserve Bank as such, the Fed wrote a note to the government saying, stop pressurizing us into decision making. We're independent from your policies and procedures, go away. And I don't think
Yeah.
they've ever done that before. So there's been a bit of hoo-ha
Wow.
around that. I
Yeah.
think, Trumpy would like to see some money flow a little easier, and the Reserve Bank saying, which is not in a position to do that yet, so go away. So that's quite
Yeah.
interesting being on the sidelines and seeing that. But look, despite
Yeah.
all of the commentary around, world domination and financial matters and all that, the US they lead the charge. Whatever, if they sneeze, the whole world sneezes with them, sort of thing. And
Yeah.
look, a lot of the funds that we secure over here, particularly for mortgages, are secured for overseas funding lines. That might not always be out of America, for example, but like I said, if it happens in America, it's going to happen everywhere else. So that's where, if you find that the more international sort of exchanges and interest rates are sort of starting to bump up, then you'll find the cost of purchasing, from a bank's point of view at least, interest or money, will be at a higher interest rate, and they're going to pass that on to the end user as sure as eggs are eggs.
Yeah.
So yeah, look, I think that's a wee way away. Like I've just said, I think we've got almost a whole year of not a lot happening. Um, and it does
Yeah.
make that uh, perfect sort of time to buy that house, regardless of where you are in New Zealand, really, because everyone has access to the same rates, regardless of what region of New Zealand you're in. And then you'll have the individual sort of capital growth spurts happening all over the show. Certainly Auckland and Wellington and Dunedin are sort of well overdue for theirs, so I think that's going to come on real strong. And whenever
Yeah.
Auckland comes on strong at anything, it affects the rest of Canterbury. The one
Yeah.
that's going off at the moment, I suppose, is Queenstown. Again, it's
Right.
just because it's such a attractive market for those overseas investors that sort of seem to have a little bit more moolah than us Kiwis. So it's a very volatile kind of market there in Queenstown, very up and down.
Yeah.
But yeah, the big players are just around the corner from really kicking off, I think.
Yeah. I mean, look, for those that are, looking to refix it, may already own a home, and say, for example, they've had a note from the bank now, hey, look, say March, let's just say, what are we, 2 months away, 2.5 months away, you need to refix again, and sent rates through. What sort of term? It's always that tricky thing, isn't it? Do you sort of, fix for a 1 year term to see what sort of unfolds? Do you lock in the 5-year rate or 3-year
Yeah.
rate, or what's the sort
Look,
of kind
my
of
advice
feel?
is based off what we're
Mm,
hearing from chief economists in the Reserve Bank and what's happening around the world. So, look,
mm, mm.
it's sort of a split advice at the moment. If you're aggressive
Yeah,
and
right.
don't mind a punt, take 6 months. Don't go anything longer than 6 months because you're likely to roll over at a time that you're at the front of or at on the face of the next interest rate increase. So that's have a
Yep.
punt at 6 months, see what happens in 6 months' time, and then we have another look.
Yeah.
If you're a bit risk adverse, and you've got a bigger loan, for example, you might want to split that into half over 4 years and half over 5 years. And again, so
Right.
the 1, 2, 3 year rate, I wouldn't even look at those at the moment because you'd find that you'd be coming out when interest rates are going up. At least with the
Right.
four
I
and
see.
5 year rate, hopefully you've come over the hump of the height of rates and are now going to ride them all the way back down to the new lows, in sort of 7-ish
Interesting.
years' time. So yeah, a bit
Yeah.
of a
Right.
split decision, and that's where I'll say, hey, look, this is what I would do, but I leave the final decision to you because I'm not the person paying your mortgage for one, and I don't really
Yeah.
understand your risk profile. So
Yeah.
yeah,
Of course.
it's good
Yeah.
information, and then they can make their decision from that.
Yeah.
Yeah,
Interesting. Brilliant. All right, Scott. Well, look, thanks so much for the look back over 2025. Looking forward to 2026. If someone's in that space where they're obviously looking to buy and they need help, how do they get hold of
yeah.
you, and what's the best way
The
process?
website's the place to go. It's got all of our contact details, emails, and phone numbers. It's got loads of free information on there, contact forms as well if you want. It covers everything from buying your first home, your subsequent home, building. So the website www.advancedmortgagesolutions.co.nz.
Fantastic. Awesome, Scott.
Lovely.
Thanks very
Thanks,
much. We'll
Joel.
see you on the next episode.
Okay.